when we talk about credit unions and banks, you could be forgiven for thinking that this is an industry that takes some time to change. Back in the 3rd century BCE, the Persians came up with this promissory note to facilitate business and exchange. And what they said is, if you bring this promissory note, we will exchange goods and services on behalf of that. You then take that promissory note and you can get your cash. The Persian word for this was tsak. Right? That doesn't mean credit unions suck, but so this is literally today translated as check. So here we are, one of the primary artifacts we still use in facilitating financial services and the conducting of banking today is an artifact that's 2,000-year-old. You could be forgiven for thinking that we're not that innovative when it comes to the artifacts of financial services. This is the oldest bank in the world. This is Monte dei Paschi in Siena in Italy. Now, when you look at this bank, when you go inside this bank, you could be forgiven for thinking that you've walked into a credit union somewhere in Middle America. Yeah, they have this high counter setting, a bench where you come and you can exchange your checks and your cash, and then they have a low counter area where you can sit and talk to the manager. It's like in 800 years, the format hasn't changed. The branch looks the same. So can banking really adapt? Can we change? Is there a need to change? This has worked for 2,000 years. Why? If it isn't broken, why try and fix it, right? Well, this is Kenya. This is M-Pesa. Now, Pesa is the Swahili word for money. So this literally means mobile money. If you go to Kenya and you want to send someone money, you don't use a check. What you do is you take out your mobile phone, you go to an M-Pesa outlet, you give cash over the counter, and you give the phone number of the person you're going to send the cash to. They then receive an SMS message saying, you've received 2,000 Kenyan shillings. So you've got 2,000 shillings on your phone. You then can take your phone to another M-Pesa outlet and you can get cash. You can show them your receipt and you can use that. It just works just like a debit card, except it's on your phone. You can take your phone to an ATM machine. You can put in your phone number on the ATM machine. Then you get another SMS message with a PIN number. You put that PIN number in and you can withdraw cash from the ATM machine. So this is pretty cool. This is transferring money in Kenya via your mobile phone. Do you guys transfer money by SMS here in... What, you mean we don't have that here in the States, but we have it in Kenya? How does that work? So there's 4 big banks in Kenya. The big 4 banks between them have 3.5 million customers. The oldest bank is the Bank of Kenya from 1895, so more than 100 years old. They've got 3.5 million customers, these big 4 banks. These guys, M-Pesa, they're actually a telco, Safaricom. They started this mobile money payment system back in 2006. When they went to the regulator in Kenya and they said, we want to introduce this mobile money system, this mobile payment system, the regulator said, oh, well, what's the advantage? Why would do this? Well, this is because 80% of Kenyans don't have a bank account. We think we can get a number of those people onto this system. It's financial inclusion. So the regulator said, how many customers do you think you can get? Well, in the first 3 years, we think we can probably get around 250,000 customers, maybe 300,000. The regulator said, this is positive stuff, getting more people in the banking system. So they started in 2006. Today, they have 13 million customers. Now, to put that in perspective, not only, the big 4 banks, they got 3.5 million. These guys got 13 million. But to put it in perspective, have you heard of Western Union? These guys do more business in Kenya in 1 month than Western Union does globally in a year. So let me ask you this. Who's the biggest bank in Kenya? Well, it turns out it's not a bank at all. It's a telecommunications company that doesn't have a banking license. Interesting. There's other examples of this too. In Hong Kong, we have the Octopus Card. In London, they call it the Oyster Card. There's other various derivations of this around the world. This is a prepaid contactless smart card, stored value card. You can use this to get on the trains and buses. When you go to the Olympics next year in London, if you're considering going, this is the way you will pay for goods and services at the Olympic venues. You'll be able to use your credit card or your Oyster card. You won't be able to use cash. And that's how you get access to the venues as well. Now, when this card first came out in Hong Kong, rapid adoption happened very quickly because it replaced paper ticketing on the public transport systems. In Hong Kong, everybody uses the public transport system. So you have 7 million population in Hong Kong. You have over 7 million of these cards already issued, and people using them every day. They started to think, if I've got this card and I'm paying for this, getting on a train, a bus, trams, why can't I use this to pay for my Starbucks in the morning? Or pay for groceries, or go into the drugstore and use this. So soon we started to see these POS terminals, these Octopus POS terminals, come into the retail environment. Now, this is the first time in the history of ATMs in Hong Kong, since they were introduced, that we saw a change in behaviour. We started to see cash withdrawals decline. So the Octopus card produced a response here, result, changing behaviour. Now, the banks got a bit concerned about this. Well, if no one's using cash anymore, that's not coming into a branch anymore, this could be a problem. So they went to the Hong Kong Monetary Authority, the central bank in Hong Kong, and they said, these guys are acting like a bank. They're taking deposits, and they don't have a banking license. You have to stop them. And the regulator said, well, what would you have us do? And the bank said, well, we can take the deposits, and Octopus can run the point-of-sale payments network. Well, everyone's happy. And the Hong Kong Monetary Authority looked at this and they said, we've got a better idea. And they gave Octopus Card a banking license. You have Zopa, Lending Club, Prosper. These are peer-to-peer lending networks that are emerging all around the world now. We have new lending networks that have just started in the last few months in places like France and in Germany. This is a social network where borrowers and lenders get together and lend each other money. Now, you think, well, who would borrow money off a friend on Facebook? Well, it turns out quite a bit. Zopa now represents about 2% of the UK lending market. Here in California, Lending Club, who's based in the Bay Area, they do over their loan book is now over $250 million. So this is a pretty significant business. If you wanted to start a lending business, and I was to tell you could get to $250 million of lending on your books within a short, just a number of years, that's a pretty good business plan. So, the old adage about banking, and it goes something like this. You take money on deposit at 3%, you lend it back out at 6%, and you're on the golf course by 3 o'clock in the afternoon. This was the old banking model, right? So what these guys have done is they've changed this model, and they say, well, we'll take it on 4%, and then we'll lend it back out at 5%, and we'll take 1% of the margin. It's a thinner margin. And they take the margin for facilitating these individuals in this social network lending each other money. But this is the funny thing. We've looked at non-performing loans ratio in respect to this business model. Now, an existing bank or credit union, if you have an NPL ratio of under 1.5%, you're doing very well. The best bank in the UK at the moment, their NPL is about 1.3%. Zopa's is 0.7%. How is it that a social network is better at managing their loan portfolio than banks? How can that be possible? Think about the psychology of this. If I'm in a social network and I have some money to lend and I lend that out to you, and you're at the other end of that transaction and you're having difficulty paying back that loan, it's no longer a big bank at the end of that transaction. There's a person at the end of that transaction. So the psychology is, I better try and make an effort to pay back. So that psychology is meaning that a social network is actually a less risky business than a bank when it comes to lending money. That's pretty freaky.